When I joined around 15 years ago, it was very much the early days of co-investing. A sponsor would find a deal, they would call up a couple of their closest LP relationships, and we would have weeks, if not more, to come back with a decision. Today, it is far more institutionalized. Everybody says they want co-investment, but what sponsors will often find is that when it comes time to execute on a tight timeline, a lot of LPs are just not internally equipped to meet those deadlines. Apogem, living in the lower middle market for the last 25, 30 years, over that time frame, we've built up some really deep relationships with our core sponsors. This relationship goodwill translates to Apogem often getting an early look on a new co-investment. The fact that we've typically completed multiple co-investments with these sponsors means that they have the comfort and the confidence in us to know that we are going to ask good questions, provide quick feedback, and give them certainty at closing. And for Apogem, from an underwriting perspective, it means that we've had a front row seat to where they've been most successful in the past. And so with each one of these sponsors, we have a really deep understanding of what a sweet spot deal looks like. And when we see those patterns of success emerge in a new opportunity, we're able to really lean in and move with conviction. We are constantly focused on continuously improving our speed to insight. We have a 8-person dedicated co-investment team that is deeply integrated with our fund underwriting colleagues, and we benefit from the cross-platform collaboration from Apogem Credit, primaries, secondaries, real assets, and GP stakes. And so doing this for multiple decades has created what is a very hard to replicate repository of thousands of proprietary comps that help us inform relative valuation, as well as what kind of returns other investors have made in the space. These insights all together allow us to raise our hand quickly, secure attractive allocations for our LPs, and ultimately make better investment decisions. The underwriting process is very intense because you are not only underwriting the deal, but you're also underwriting a sponsor that probably doesn't have a formal track record attribution. And so we look to reconstruct track records based on information that we have from the sponsor's prior firm, as well as extensive reference work, both of which would be very challenging to do if you weren't living in this market for many, many years. One thing we like about it is the alignment is really good. So if you think about an independent sponsor, they've probably just recently left a nice job at an established firm. And not only are they putting their personal capital on the line, but they are taking very real career risk in this deal. So they really need this one transaction to work if they want to build a successful track record that allows them to go on and raise a committed fund. Independent sponsors are also less likely to prevail in a competitive auction process, so they're almost forced to find off-the-run deal flow. Proprietary is a very overused term in this industry and truly rare, but this is one segment of the market where it still exists. And so we typically see that translate into lower entry valuations, which can be a critical driver of outsized returns.